you're looking to invest in real estate, understanding key financial terms is a must. Here are the top 7 terms you must know to be successful in real estate. Number 1, the 1% rule. 1% rule is a quick way to evaluate if a rental property might generate positive cash flow. If the monthly rent is at least 1% of the purchase price, it could be a solid investment. For example, if you buy a home for $150,000, the rent should be at least $1,500 per month. While this rule isn't perfect, it helps investors filter out properties that may not perform well financially. Number 2, appreciation. Appreciation is the increase in a property's value over time. Think of a home in a growing neighborhood. Demand rises, and so does the price. If you buy a property for $200,000 and in 5 years it's worth $255,000, that's appreciation. This is one of the most powerful ways investors build wealth, but remember, markets fluctuate and values can go down too. Number 3, equity is how much of a property you actually own. It's the difference between what the property is worth and what you still owe on the mortgage. If your home is valued at $250,000 and you owe $150,000, you have $100,000 in equity. As you pay down the loan and the home's value increases, your equity grows. Number 4, cash flow. Cash flow is what's left after paying all your property expenses. If you collect $1,500 in rent, but after paying the mortgage, taxes, insurance, and maintenance, you have $275 left. That's your monthly cash flow. Positive cash flow means you're making money each month. Negative cash flow, you're paying out of pocket to keep the property running. Number 5, net operating income. Net operating income, or NOI, shows how much a property earns after operating expenses but before mortgage payments. If a rental brings in $25,000 per year but has $9,600 in expenses, the NOI is $15,400. Investors use this to measure a property's profitability before financing costs. Number 6, cap rate. Cap rate, or capitalization rate, helps compare investment properties. It's the NOI divided by the purchase price. If a property has an NOI of $12,200 and costs $200,000, the cap rate is 6.1%. A higher cap rate usually means higher potential returns, but it can also mean more risk. Number 7, cash-on-cash return. This measures how much cash you earn compared to how much you invested. If you generate $6,600 in cash flow on a property you put $45,000 into, your cash-on-cash return is 14.67%. It's a great way to compare different properties and financing strategies. Understanding these terms can help you make smarter real estate investments.